Right, traders, good morning, good afternoon, good evening, wherever you are. First, we got the CPI appetizer. Now the PPI main course is here, and it's fine, like lukewarm wings at happy hour. You'll eat them, but you're not necessarily thrilled. Let's unpack today's producer price index and why it matters. Spoiler alert, this data tells us what producers are paying, which often leads consumers' prices. Yep, PPI is like the weatherman for inflation. CPI just reports the rain. Now here's what dropped. PPI in May was up 0.1%, after down 0.2% in April and down 0.1% in March. Year over year, we're at plus 2.6%. And core PPI, excluding food, energy, and trade, is up 0.1% month over month and up 2.7% year over year. Translation, inflation at the producer level is still cooling, but not crashing. Think room temperature bath, not ice cold, but not boiling hot. Now, what's driving this exactly? Final demand services are up 0.1%. Final demand goods are up 0.2%. What moved up exactly? Machinery and vehicle wholesaling up 2.9%. Coffee, poultry, natural gas, residential, tobacco products up 0.9%. And what moved down were airline passenger services down 1.1%, jet fuel down 8.2%, still scrap. So yeah, jet fuel's tanking, but producers are paying more for coffee and car parts. Priorities, right? Now, this is the nerdy part that matters more than you'd think. Intermediate goods were up 0.1% and unprocessed goods were down 1.6%. Natural gas is down almost 19%. Now, why does this matter exactly? Intermediate demand is the supply chain's supply chain. If it's the price pressure before it hits producers. So this drop could mean CPI softens in the next month or two. Basically, we've got a bunch of price declines and stuff you've never heard of, but that eventually turns into cheaper packaging, manufacturing, or shipping. Just give it time. So how does PPI tie in with CPI exactly? CPI is what you pay. PPI is what the supplier pays. If PPI goes up, CPI usually follows with a lag. If PPI cools off, CPI might too. This week, we saw CPI at plus 0.1% and plus 2.4% year over year. PPI, we saw 0.1% month over month and year over year, 2.6%. They're basically twins now. Not identical, but definitely in the same group chat. This later this year, but not tomorrow. The Fed's still watching labor and spending. So pre-market, futures were slightly green. Treasury yields steady to down, and tech is catching a little bid. Markets are shrugging and saying, cool, inflation's still slow, but not dead. We'll take it. No fireworks, no panic. Both CPI and PPI are trending soft. There's no sign of runaway inflation right now, and the Fed might actually be able to pivot later this year. But don't start buying weekly SPY 600 calls just yet. We're still in chop city. The data says soft landing, but PPI is in, CPI is cool, and the Fed's rate cut mood is cautiously curious. If you like this breakdown, drop a money bag in the comments. Like, sub, and hit the bell so you don't miss our next Flow Watch or Macro Minute. Because if you wait for CNBC, you're already late. Want the Substack breakdown too? Click the link in the description. It's got charts, trade setups, and even more sarcasm. See you guys in the next one, and I hope you have a great day.